The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 3rd. How about that, folks? We're already in the month of November. This is the November 3rd magnificent Monday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I hope that everybody out there had a fantastic weekend. I know I did. How about all that trick-or-treating? A little bit of sugar in your system out there? Well, look. Let's make sure one thing, we should always be pioneers of our future and never, ever be prisoners of our past. That means we should always remember that the greatest danger for most of us is not that our aim is too high and that we miss it, but that it's too low and we actually reach it. Now, that was the belief system of none other than Michelangelo. So I say paint the best picture possible, shoot for the moon, because even if you miss, you will become a star. Our call-in number is 877-927-6648. A little bit of a cool weekend around the country, and it warmed my heart by giving me a call. Of course, internationally, you can do the same by reaching us at 727-445-1044. This is Magnificent Magical Monday. This is Tiger Financial Network. I'm Steve Rhodes, and welcome to the show right now. Dow futures, they're positive. They're trading up 20 points, trading out at 17,331. S&P futures have broken through a key level of resistance, 2,011.75. That's the number to be watching today. They're trading out at 2,015, up 4 points as we speak. NASDAQ futures up 8 points, trading at 41.58. King dollar on the move this morning. She's up about 25 cents, trading out at 87.26. Goldilocks back $2. Silver down 7 pennies. Light sweet crude up 11 cents. Natural gas up 16 pennies, up 4% this morning. After that, I could not believe my eyes when I saw that it was snowing on Saturday morning in North Carolina, in the mountains of North Carolina. And other places. They even had flurries in Atlanta, and even down here in Florida. It got just a bit nippy. Of course, a bit nippy for me means below 70 degrees, so it was darn right frigid down here in Florida as it got into the 50s and 60s out there. That is not why I moved to Florida so many, many years ago. Let's take a quick peek across the globe. Let's see what we've got going on out here over in Germany right now. The DAX, she is off about 16 points, so it was down a bit lower early this morning. The FTSE, that's off 26 points, about 0.4%. Nikkei was closed last night. The Hang Seng down 82 points. The Shanghai up 10. Again, our call number is 877-927-6648. Key number to be watching today, in my opinion, is inside the ES Mini. We'll just simply call it 2012. That'll make it a little bit easier to be watching versus 2011-75. Let's go take a look at the futures markets out here. Let's start off by taking a look at where we're at. Let's look at the daily charts for each of these. Let's take a look at the NASDAQ first. If we take a look at the NASDAQ, it most certainly cleared its swing point high, that swing point high being the September 19th level. It did it with some volume out there. If we take a look at the Qs and use that as a benchmark, so it cleared a swing point with volume. That sets up the potential for the A to B equals C. Now, we've made a 100% move of a move. This is really, we're at a point here where the market should begin to get a bit tired and consolidate some of these gains. Doesn't have to, but it should. So we'll find out whether it does what it should or whether it does what it wants to do out here. But the A to B equals CD pattern on this, what it is that you're looking for between now and I would say Christmas, between now and the New Year's Eve time frame out here, is a move up to, at minimum, 43.93. You're at 41.58 right now. But I would have to say, knowing this pattern here that I'm looking at, knowing the type of move that we have had over the last 11, 12 trading sessions out here, we're really more likely looking at a move to 45.85. We'll want to take a look at the monthly charts since we have ended the month. We'll certainly take, and we won't do that right now, but we will do that during the next couple of hours for sure. But the NASDAQ out here, as long as it's able to hold the 4118.75 level, there is no reason for it to not continue off to its next price point. Now, the next price points, the expansions, if we take a look at them, are the B to C expansion would take you up to a price level of about 42.37. So if the ES Mini is able to hold this 2012 level, then I would say there's a pretty decent chance that you can get to 42.37 or 41.58. So another, 40, 60, 70 points or so in the NASDAQ today and tomorrow. You could expect to see that coming in to the election. So that's what's going on with it. If we take a look at the S&P futures, the S&P futures right now, they are just testing. They're continuing to test the September 19th high. And that level is actually 2014.50. We saw a test of that area on Friday. We saw it close below. Come on, give me my cursor back here. Geez, don't do that to me. Okay, great. And we're trading above that level right now. So a couple of key areas really inside the ES Mini. First is Stevie's 2012. The second is 2014.50. You trade above that. Well, guess what? That's up in A to B equals CD to the upside. But let's take a look at the expansion pattern. That's more likely to occur first. The expansion from the September 19th high down to the low on October the 15th. 1 to 1.272 would take us into about the 2069-ish level. I don't expect that that's what we're going to see here between today and tomorrow. But, the market's going to do what it's going to do out here. But that is the next level. Key level, reading that 2014 50 area, 2012. You see a move down below 2012 today. It says just keep your stops in place. Make sure that you've got stops in place for sure on any of your long positions out there. If we take a look at the Dow, let's go see what the Dow futures are doing here. Of course, they're also tackling, and they have tackled that September 19th swing point, which I think is extremely impressive out here, especially when we consider that we've had a couple of disappointments inside of the Dow. To me, what the meaning is that you've got it's not just the heavily weighted individual stocks inside the Dow that are moving higher. It's just as a group, it most certainly is moving higher out here. But all of these have made that 100% move. Typically, normally areas where you start to see just some kind of consolidation, maybe a bit of a retracement out there. Nonetheless, the number to be watching inside Dow futures at 17,279. They too, an A to B equals CD to the upside. If we take a look at expansions, though, from September 19th down to the October 15th level, your 1 to 1.272 target on this comes about to about 17,689. Dow is going to go much higher than that before we get to the end of the year out there. Yeah, it's going to be in that 18,000 number for sure. Now let's take a look at of course, I can't say for sure. How can I really say for sure? I can say for sure until there's other information that provides itself to us. But at this stage here, there's not. In any event, I'm going to hold back my thoughts as best that I can. If we take a look at the Russell 2000, well, we know about this. Really, a couple things that we know about this. Russell 2000, number one, still inside that 135-point consolidation level, between about 1078 to 121163 or so. That is where the Russell 2000 is headed to, 1171. Is where it's trading at right now. 1211 is where she's headed to. Could it reach that point between now and Tuesday? Yeah, most certainly it can. Right now, what it's tackling, what it's dealing with here is its most recent swing point, which was September the 3rd out there. So if it clears 1187.90 out there, then yeah, it's probably going to make a run for that 121160-ish type area. Of course, breaking above that, you've got a 135-point move to the upside. What that actually does, coincidentally, and there are no coincidences out here, what that actually does is that goes ahead and completes the monthly long-term, I don't remember, was it 16 years or something like that, consolidation pattern inside of the Russell 2000. So it'll be very interesting to watch how that all plays out. That's really going to be a key area. Now, the Russell 2000 is really taking on a leadership role. Yeah, it's not above the September, or in this case here, my apology, the July 1st swing point, because that's what it's dealing with out here. But really as a percentage, what it's doing, it's really taking on a leadership role. And that's what you want to see in a bull market. That is not representative of a counter-trend rally. That's not what we have going on here. It's impossible for this to be a counter-trend rally. You're already above the September 19th swing point in the Dow, inside the ES Mini, inside of the NQ out there. So you can take that counter-trend rally stuff and you can throw that out to the trash, out to the street, because that's not the pattern that is in play. Now, if we take a look at maybe some intraday charts here, let's go take a look at some intraday charts. You get a feel for what's going on inside of the Nasdaq. So on an intraday chart, we've got in the upper left-hand corner. If you're watching us on TigerTV, and I was over at TFNN World Headquarters on Friday. Boy, do they have a treat for you? Do they have a treat for you? I think it's going to be someday. You talk about trick or treating. Well, you guys are going to be in for a treat. Like it's amazing. It is truly amazing what Tom and the guys at TFNN have done for you. So I can't wait for this to get out there. But if the upper left-hand corner of my screen, you're looking at a 30-minute chart. The upper right-hand corner is a 60-minute chart out there. Lower left, 120-minute, and lower right, the 240-minute time frame. If we take a look at the 30-minute time frame out here, let's go see if there's an A to B equals CD pattern. Well, there would be if, in fact, the Nasdaq can get above the high from Friday, which would be 4163.50. So it has not taken out Friday's high as of yet on the 30-minute. It's in bullish formation. It's up above its TAS market profile high out there. That resistance zone being 41.49. The key level to watch today, I guess, would be the bottom, the support level, 41.46. You get below that and says, okay, that retracement, that move sideways would be coming into play. If, in fact, the Nasdaq is able to take out its high from Friday, well, then what it sets up is most likely an A to B equals CD to the upside out here, but not really much of a retracement. But nonetheless, that's a pattern that would be out here. That pattern would take you into, looks like the lows maybe right about down there. It'd be a large one. 42.56 would be the number. That's looking at the 30-minute chart. But let's go take a look at the 60-minute. 60-minute says you're going to have resistance at 41.63. 41.63.50 to be exact. That happens to be your TAS market profile resistance level. So we can see price here just really has been consolidating since about 10 o'clock in the morning on October 31st out there on Friday. Of course, all those gains came in the early morning hours as the Bank of Japan, announced a program out there for increasing their quantitative easing, and then you had the pension fund at the for the Japanese government. They also announced some important bullish things out there as well. If we take a look at the 120-minute time frame chart out here right now, we can see that the price is up above its resistance level. So this is in bullish formation on that time frame. It too, though, it's going to need to clear that swing point high from October 31st. And so just as we were looking at on the 30-minute chart, really nothing bearish here. Neutral on the 60-minute, neutral. That's it. Because the 240-minute chart has also cleared a resistance zone. Hey, this is Steve Rhodes. This is TFNN. Let's see, what do we got moving in the markets here this morning? Looks like Covance, CBD, moving to the upside, and Nymox Pharmaceuticals to the downside. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So I mentioned a couple of stocks that were moving. Well, just a pair. Covance CBD. It's a buyout out there, so that's what's going on. That's why that's leading the charge dollar-wise. They closed out at about $80. They're trading out right now at 100.85 out here. Looks like the first up individual stock-wise out here is Alibaba Group. They're out with numbers, I believe, after the bell today. They closed out at 98.50. They're trading out at 99.53 as we speak right now. To the downside, I mentioned Nymox. I think that's how you pronounce it, Nymox Pharmaceuticals. No, looks like they have a phase 3 study that maybe failed, and this is nasty. Man, this is very nasty. They closed at $5.14. They're trading at 75 cents right now. Hope nobody out there actually owns any of that. No reason for us to take a look at that. Nobody's going to be happy inside of that stock. You got American Realty Capital. ARCP is the ticker symbol. Looks like they've got an agreement here, contract that expired or is going to be terminated by somebody. So they're trading down a bit. They're trading out at 734 out here. Let's go spend some time taking a look at the currency market out here. If we take a look at the currency pair, and let's look at the euro as we speak right now. Now, I've got the actual currency pair versus the futures contract. So we've got, looks like about a 10-minute delay on this feed here. So not that big of a deal. Now, inside of the euro, which has just, simply been trashed out here, you've got, if it were to end like this right now, you've got another hammer candle that is forming. It continues to try to hammer out a low. Now, we had a hammer candle that formed out here on October 30th, but Halloween, it was a treat. It was not a treat. It was a trick out there with regard to that hammer candle. We've seen price come down, test the most recent swing point low, which was the October 3rd level. That price is at 1.25, even Steven out here. You can see that that's the area that's been tested. So you get a swing point being tested. It's being done, by the way, with less relative weakness out here. So even though we've seen quite a move lower inside of the euro, it continues to move lower with less weakness, okay, less strength, right? Less weakness. So it's really the way to take a look at it out there. That's always the sign of, at minimum, of a snapback. But I still hold true to the belief, to the because of the data that I'm looking at, and I don't, as I've mentioned before, I don't know how it is that the euro is going to not just bounce, but a very strong bounce out of here. That's going to go ahead and send the U.S. dollar index cascading lower. I'm just waiting for some additional signals out here, and that is going to even look just a dead cat bounce, just a 0.382 bounce now because of the the super extension that we've seen inside the euro brings it up to 1.30334, but more likely it's at least a 0.618 retracement right in the 134 level. You're 124 and change as we speak, basically 125 right now. So that's a very large move. That would be a very large move inside of the euro, and that would be a large move, large impact to the U.S. dollar index out here. So that's what's going on inside of that currency pair. Of course, the euro, Japanese yen, the fuel for the fire, the one currency pair that tracks U.S. stock markets better than anybody else out here. Well, this has gone beyond the 1 to 2 A to B equals CD to the upside. In fact, let me just edit this piece, and let's go add back in some of the other levels out here. Give me a moment to let's see, where is it? I've got level number 5 is 0. How about level number 4? Where'd level number 4 go to? That's at 2. Okay, so let's go to level number 5 out here. Let's put in 2.618. Let's see what's going on at the 2.618 level. Let me change that color to white as well. So it looks like that's where it is headed to next inside this currency pair. So that'll take it up into about the 142.72 range out here. Let me see if we've got any expansions of swing points as well that maybe lined up with that area. In this case here, it's the September 19th swing point high, right? Our markets made a high in September 19th. The euro Japanese yen takes out the September 19th high. We've seen our markets take out the September 19th high as well, right? The low inside the euro, by the way, that took place on October 16th. Our markets made a low when? When? Yes, October 16th. You don't think that maybe there's a little correlation between this currency pair and simply what our markets do? Now, you don't have to trade the currency pair, but it really would be foolish for us to ignore what this currency pair is doing or what it's not doing out here. So this actually bodes well for the day, for the bulls out here. But it looks like the this currency pair ought to run into a bit of resistance right around that 142.72, 143.15 type range out there inside of the market. So we'll pay attention to that inside your friend and mine, the euro Japanese yen, the currency pair that just keeps on giving us information. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow down 8 points, trading out at 17,382. S&P up 1 at 2019. Composite up 3 points at 46.33. Russell 2000 is flat. She's trading at 11.74. We'll take a look at Goldilocks and silver. Gold's off $3 right now. Silver down 6 pennies. Light sweet crude off 28 cents. Lead the charge to the upside. Well, you've got Covance and Sapient Corp, but both those on buyouts. A&I Pharmaceuticals up 14%, up about $5. BioMarin Pharmaceuticals up $3, up a couple of bucks. Herbalife up 5%, up $2.40. Eastman Chemical up about $2. Illumina Inc. up $1.77. Rand Gold Resource. We're going to go take a look at the gold stocks out here. The gold trading lower. We got some of these. I see several gold stocks here that are, a few gold stocks that are trading higher. We want to keep a very close eye on the gold stocks. You've got the U.S. Silca Holdings, the sand company, up a buck out there, up a couple of percent. So the downside, We had mentioned, no, I don't think so, Laboratory Corp. LH is the ticker symbol. Lean hogs. No, it's down about $7, off about 6%. NYMOX Pharmaceuticals, well, we know that one hit the skids, trading out at 75 cents. Federated National Holdings off 10% this morning, down 3.60. Baidu's off about $2. Netflix down $1.70. Sears Holdings off $1.70 as well. Again, our call number 877-927. 6648. Let's begin by, let's go take a look at some of these a couple of gold stocks out here at least. Let's take a look at Rand Gold as an example. It's up $1.55 this morning. Let's see what this has done. Oh, close, but no cigar. Could have created a nice little island bottom reversal. Well, I don't think that it does. Hold on a second. Hold on. Hold the horses out here. Hey, did you see that? There was a horse race out in California. What horse race was that? On Saturday afternoon, right? No, it's Saturday evening. What was that horse race? The Breeders' Cup? I think this Breeders' Cup out there. So I hold your horses. Let's see. The high here from Friday inside of Rand Gold, 59.39. The low this morning, 59.72. Son of a gun. 59, let's see. The low of October 30th. Write these numbers down. Would you say you got 59.72 is the low of the 30th. The low of this morning, 59.72. And the high was 59.39. Yeah, Rand Gold Resources. Now, trading is not over today. But at this stage, Rand Gold Resources has formed a potential island bottom. Well, right now it's an island bottom. There's no other way to call it. You get an island bottom reversal pattern inside of Rand Gold. Now, that's a pretty important message. We're going to come back and let me just put down here. Let me just island bottom. Well, of course, I should probably learn how to spell better. Okay, so you got an island bottom pattern out here. Now, an island bottom reversal. This is more important on an individual stock out here, and it has a lot of meaning. It should have a lot of meaning. Now, I'm going to pull Rand Gold back, see if we can find any other island bottoms or island tops on out here. So let's take a quick peek. I've got to come back much further, but that's pretty important, knowing, at least it's pretty important in my book, knowing that probably the next biggest move inside the markets is not inside the indices and inside the sectors as we speak, not at least for a couple of weeks, but is going to be probably coming from the mining sector out here. And we want to go mining for some signals out here. And at this stage, we don't know how the day is going to play out here. But what we do know is if the day played out like this, Rand Gold Resources just gave us a pretty big signal out here. Now, there was no island top. Not really out here. Oh, here's the last island bottom reversal. Okay, good. So January 9, 2014, Rand Gold Resources had an island bottom reversal. If you take a look at the trading session on January 8th, the low out there was 61.20. The high on the very next session that created that island was 60.14, and the low on the very next session was 60.82. Now, from there, we saw Rand Gold Resources move from about the $60 range all the way up to $85. $25 move on a $60 stock. Boy, that sounds like a pretty decent return to me. It got up there, and it did that on March the 6th, so a pretty decent run. So there's an island bottom inside of Rand Gold Resources. Now, I didn't even know that it was out there. I just said, hey, let's go searching to see if there are any other island patterns out there, because you want to see what, it's in when it comes to, here's another island bottom that actually formed out here inside of Rand Gold. This was over the period of, looks like 2, 4, 5 trading sessions. This case here, it just made a 100% move by getting back to its prior swing point, and then it just kind of traded sideways, and finally that island gave it up on price out there. But they are most certainly worth noting. So that is on Rand Gold. We'll pay attention to that. We'll try to remind me tomorrow morning. We'll come back and we'll take a look at it. But that's an interesting pattern inside of that equity. Let's take a look at a couple of others out here. Let's take a look at Barrick Gold, ABX, which has been just simply pounded to the downside. See if we've got anything here worth noting. No, we do not. But down with a major volume on Friday. That could have been an exhaustion move to the downside out there. Let's take a look at AEM, Agnico Eagle, up 13 pennies here this morning. No island bottom there, Mon. Could have formed it, but no, it could still do that tomorrow. So just moving sideways. So nothing substantial that I can see there. Let's take a look at Goldfields, GFI. That's up 8 pennies right now. Let's go see what Goldfields. And Goldfields just having an inside day as well. So, but you do have a number of stocks out here that could also form some island bottom reversal patterns out there. So maybe Rand Gold is not the last, and you have to go through, sift through about 40 positions out there to see if you can find similar type behavior patterns. But the one that we most certainly, and I'll just kind of note it on my pad out here to make sure that we pay attention to, was whether or not Rand Gold continues to hold on to these highs out there, and how much of it is a currency move. But look, it's an island bottom as we speak right now, so it is worth continuing to pay attention to. Now, so we took a look at the currencies. We looked at the euro, Japanese yen. We pointed out the importance of that currency pair. We looked at the euro itself. We know the importance of that is its correlation to the U.S. dollar index. Not much really going on inside the Great British Pound, so no reason to have to look there. You got the Dow is off 11 points. The S&P is down 36 pennies. If you caught Friday's show, of course, I was having all kinds of technical issues because of my laptop while I was over at corporate and HQ on Friday. And so then I had to go through. I didn't have to, but I decided the best way to use that time was to help people understand how I came up with the, when the market was crashing lower, moving lower, that I was making a call that the market was going to make a significant bottom out there. So I shared with you the work that I had done to make that determination and to feel confident in that determination. Then what I also said was my expectation is that for the next couple of weeks, the market is going to move sideways out there. So I said that on Friday. I said that in the face of the market moving a couple of 100 points higher inside of the market. I said that as the market was up at those highs and said, hey, if you're long, it's time to start. You got to consider what you want to do. Neutral position is not too shabby. Adjusting your stops just depends on your trading style out there. So I was able to say that Friday in the face of the moves higher inside of the market. So I still, so I want to just be clear, I'm sticking to that position out here. I do believe these markets are going to go much, 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 much further higher into the end of the year. But at this stage, and it doesn't have to be today, so I'm not saying that it's going to be today out here, but I am sticking with the belief based on all that same work that allowed me to reach that conclusion that the market was going to make a significant. Now, I didn't know it was going to make a significant low and bounce the way that it did. And it's not that that's unprecedented, but I did not expect, that was not my expectation. Making a significant bottom, that was my expectation. So my expectation here is a move sideways, a retracement, and the market's going to do what it wants to do. It doesn't really give a gosh darn hoot about what it is that I say out there, but I am going to share with you, my view obviously on the market. So we've covered the currency pairs. The euro, Japanese yen's got some further room to run to the upside. That can go ahead and lift the tide a bit further out there. We want to keep an eye on the euro, Japanese yen to see if that starts to reverse course out there, because that would then help us to identify that pattern. Now, I did mention we took a look at gold, a couple of gold stocks out here. Let's go take a look at gold itself. As we take a look at Goldilocks out here, trading back a couple of bucks. At this stage of the game, not giving us any kind of signal of any type of a reversal. What we know about Goldilocks is that it's made a 1 to 1.272 A to B equals CD to the downside out here. So it did that. It completed that pattern. It did that on Friday as it got down to a low of 1160. But that's all that she has done at this stage. There is nothing on the daily chart. I don't believe if I switch over to a 30-minute chart that I'm going to find anything else out here. And what we would be looking for at a minimum would be an A to B equals CD to the upside out here. And we do not have that pattern that is in play. We could have a pattern like that would be in play. So on a 30-minute chart, let me give you what that would be. Now, what I'm doing here is I am going to, let me see if I can expand this. I know that I can. And then let me move this up a bit here. There it becomes a little bit easier to look at. So what we're looking at here is I'm using the swing point low that came in at about 22. This is a 30-minute chart. So sometime between 8 and 8:30 last evening. So if we go from that low in the gold contract, 1161, all the way to the high that was put out here, this little doji candle at about 7:30 this morning, 1173. Now we're taking a look at possible retracements. Right now, gold is sitting at the 0.382 retracement, 1168. Pulling back to 1165, that would be normal. What we're looking for is it being able to clear this high out here from between 7 and 7:30 at 1173. If we see gold clear that high, and then we see gold, there's a couple different A to B equals. So I'm going to use the one that's potentially in place as we speak right now. If it breaks above 1173 from here, you're looking at 1179. I'd have to say more likely 1183 out there. But pulling back to the 0.618, we're just simply looking for a short-term A to B equals CD pattern. And when I say short-term, I'm not talking 5-minute chart, but a 30-minute chart would be a pretty good one. Hey, let's go out to Pennington, New Jersey, to a fellow beer drinker, Mercedes enthusiast, to Mike in Pennington. Mike, thanks for calling. Thanks for holding. How you doing this morning?
Good. How are you doing today?
Excellent. Do you have a nice weekend?
Pretty good, yeah.
How was the weather up in your neck of the woods? Pretty frigid,
Beautiful.
or?
Yesterday was a good day to put the top down.
Okay.
Saturday was raining, so just I worked Saturday.
Yeah. Okay. Well, that's a good thing to do when it's raining out there, is to work. You wanted to take a look at Invensense. I think I can get it out. Tell me what you're doing and how I can help you.
Well, I just bought it this morning, and it looks like, fundamentally, it looks like a good stock going forward. And with all these snapback rallies going on, I thought it might be something to take a look at.
Yeah. Now, when you were looking at it, so you know about the company fundamentally is what you're saying.
Yeah.
Okay. So you've got that working for you. Technically speaking, last week's move down with volume, and it was one of the largest volume weeks to the downside, was in a market that has been moving to the upside and taking out its September 19th area. You'd almost say it's kind of flying in the face of the financial ointment, so to speak. You know what I mean? So technically, yeah. Go ahead.
I could talk about 100 stocks that were down like this, and I short them, and the next thing you know, they're back up 30%. So
yeah. No, I got you. I'm just pulling this thing back a bit, see if there's anything that we can find that went ahead and stopped this in its tracks out here. And, other than coming back into the October 28, 2013 swing point, which it did, but it did with more volume, that's the only thing in its tracks. Here's what I would say. At this stage here, I'm assuming that you've got, bad for me to assume anything, but you've got a stop place maybe below the October 30th low out there, 1503?
Yeah, 1550 or around there.
Okay, so even a tighter stop. Okay, good.
December 13th, December of last year, there was a low. Looking at that one, 1582.
Yeah. Well, what you'd like to see out here is you'd love to see this. You'd love to see, number one, you'd love to see some type of bullish formation out here, whatever that might be. Now, what that might be would be a gap up. If this thing can somehow gap up tomorrow, let's say, and get above the high of the October 29th session, just so we were taking a look at Rand Gold Resources, that high is 1722. If we were to gap up above that, then you'd have a real nice bullish signal out here. But as I take a look at this, Mike, and I'm just speaking technically, so you know it fundamentally. Technically, I don't see a high volume high out here. I don't see a sign of strength that this thing really pulled back into. I don't have any of those technical patterns. Now, what it did do, so here's one thing that it did do, and that was I think, did you mention October 30th? Was that what you were looking at?
December of last year, December.
Okay. I would say this. If I were looking for a pattern out here, a trick-or-treat pattern, it just so happens that on October 30th of 2013, it moved down with volume, 13.3 million shares. And so, interestingly enough, it was October 30th. What's this thing got with October 30th? That's when it moved down, but it was only 8 million shares. So that 8 million shares was testing that swing point with 13 million shares with light volume. That's what you like to see. Nice going. Nice going. Mike, good to speak to you.
Okay, talk to you soon.
Okay, that was Mike in Pennington, New Jersey. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 15. S&P is flat out here. Composites up 14 points. You know, all that cold weather that we had over the weekend. You know what bears do when the weather gets cold, don't you? It's right. They hibernate. So the bears are hibernating out there. Just expect the markets to kind of chop around out here. Hey, let's go out to Nashua, to our man Lou. Lou, thanks for calling. Thanks for holding. How you doing today?
Very good. Thank you.
Are you you wanted to take a look at the soybean futures out here? So tell me what you're doing. I assume you're looking at the November contract?
Probably the December.
December, okay. Are you in a position, looking to get in a position? Tell me what you're...
I'm looking to get in, but I just wanted your opinion whether it may or may not work. I was thinking of getting some puts.
Yeah, okay, they're going to get some puts, okay. You know, it had soybeans here, folks. What I've got up on my screen here is the November contract. I don't think there's a December one, but is the November contract. And if we take a look at from the high out here in May down to the low that was put in October, you know, so far what it's done, thanks Z, says use January. I didn't think there was a December contract. If we take a look at what it has done here, it's made the dead cat bounce a 0.382 retracement, and so it's really kind of stopped in its place. Let me put the January 2015 contract up here. So let me switch over to that. That's gosh, how was that? F, I believe, is the contract, if I'm not mistaken. So F5. Let me see if that will pop up on our screen here. There we go. So if we take, okay, thanks, I appreciate that. So if we take a look at the move from the high out here, May 22nd, down to this low, yeah, same pattern out here, you know, where it's just really stalled here at that dead cat bounce. So what I would say here is, from a volume standpoint, you know, it's had some volume has been ramping up as it's been moving into this area here, and you're thinking of going short, right? So yeah, I'm not seeing that. If I just switch down to 120-minute time frame chart out here, what I would be looking for is probably an A to B equals CD pattern to the downside, you know, some type of Gartley buy pattern to form the next buy inside this. Right now, it's doing what it should do, which it got that dead cat bounce at 0.382 retracement level, and it's kind of stalled out here. If soybeans break the 1019.6 level out here, you know, that would break a TAS market profile low out here. Then maybe it has more merit to run to the downside. But I just, at this stage here, it's just kind of consolidating sideways after making that dead cat bounce. All right?
Right. I think the corn looks the same way.
Does it? Okay. Yeah. So that's what it's doing, my friend, okay?
Okay. Thank you.
Hey, thanks. Let's go out to Sam in Philly. Sam wants to take a look at Johnson & Johnson. Tell me what you're doing, Sam, how I can help you. I've got about 35 seconds.
Sure. Yeah, I want to have like a price entry for Johnson & Johnson.
I'm sorry?
A price to get in.
Price to get in. Okay. Now is not the time. What Johnson & Johnson should do, it should go test the September 24th swing point high. That's at 108.77. You're trading inside that swing point right now. You need some more evidence to see what it wants to do. If it can take out that area, then this thing might have a larger A to B equals CD. I'd have to really pull it back to the but it moved into that swing point with volume. That was on October 31st. The volume there was about 10 million shares. So you got to wait for that high to be tested, and then probably some kind of retracement, probably some type of dead cat bounce retracement. All right, Sam, I'll take a look at it further for you during the next show.
Thank you.
Okay, you bet. Hey, folks, it is Magnificent Monday. Thanks so much for joining us here at TFNN. As always, have a great day. I look forward to seeing you soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.